Welcome. In this video, will Xcn coin price rise further? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart in detail, it is clear that a descending wedge pattern has formed, which is a technically quite remarkable structure. Such structures are often considered as turn signals in the markets, and their appearance, especially towards the end of downtrends, can herald a potential change in direction. The descending wedge is seen during periods when the price moves in a progressively narrower area, the bearish momentum slows down, and the market starts to tighten. This narrowing process often signals that buyers are gathering strength and sellers are gradually weakening. Therefore, in case of an upside breakout of this pattern, a very strong and fast bullish momentum can be expected. The current structure quite clearly reflects a classic descending wedge pattern. The price oscillates between the falling upper and lower trend lines at smaller and smaller intervals. This pattern of movement suggests that market participants are now indecisive and waiting for a directional decision. However, this indecision is not misleading because technical analysis shows us that descending wedges are often considered bullish signals. Especially in downtrends, the appearance of this structure indicates that the last phase of bearish pressure has entered and a breakout is imminent. And if this breakout occurs to the upside, it represents the beginning of a brand new momentum in the market. Descending wedges can often be perceived as deceptive declines, because from the outside the price is constantly making lower highs and lower lows. However, careful observation reveals that within this structure, price movements become increasingly compressed and actually suppressed. This compression represents an energy that is being stretched like a spring, and this energy is released at the moment of the breakout. If this breakout occurs to the upside, buying pressure can spread quite strongly across the market. This would cause the price to accelerate upwards quickly and decisively. The current stage of the descending wedge pattern on the chart shows that the price is quite close to the upper trend line of this structure. So, the countdown for a possible breakout may have begun. At this point, volume behavior is also very important, because in technical analysis, the support of pattern breakouts with volume is of great importance for the permanence of the movement. In the current situation, it is possible to observe that the price is approaching the upper trend line, and a slight revival has started on the volume side. This gives a positive signal that the breakout may occur very soon. Descending wedge patterns usually allow for the recovery of previous losses after a breakout occurs. After the breakout, the price has the potential to rise initially up to the initial levels of the pattern. New highs can then be targeted if these levels are exceeded. Especially when we look at the movements following such structures in the past, it is possible to see rises exceeding 30%, 50%, or even 100%. This shows why this technical structure is such an important pattern to follow. Psychologically, the upside break of the descending wedge structure creates a morale effect on investors. An upside breakout at the end of a long period of declining price action causes investors to regain hope and increase their interest in the market. This causes the price to be supported upwards, not only for technical reasons, but also for market psychology. But we can't decide the analysis only by the pattern. Let's look at the other metrics. Stay tuned. When we examine the chart in depth from a technical point of view, we see that the price movements reveal a very important structure. Especially in the Fibonacci measurement from the bottom to the top, it can be clearly observed that the price fell between 0,618 and 0,786 and started to react upwards from this region. These levels are known as highly critical regions in technical analysis and are among the regions where both short-term and medium-term directional changes occur in the market. Fibonacci retracement levels are a valuable tool for traders to understand at which points the price is likely to turn back up after a correction. And the chart we have right now looks like it's setting the stage for just such a reversal. The pullback towards 0,618 and 0,786 can be considered a classic correction. Such corrections are usually necessary for an uptrend to continue in a healthy manner. This is because a continuous upward movement of the price goes against the natural market dynamics. Market participants sell profits, new buyers want to enter at more favorable levels, and so on. However, how long these pullbacks will last and where they will turn is a critical issue for investors. This is where Fibonacci levels come into play. The current chart shows that the price retreated between 0,618 and 0,786 Fibonacci levels and started to turn upwards again from this area. This can be considered as a very positive signal in terms of technical analysis. This is because these levels are areas that have been established based on historical price data and are considered strong support areas by investors. In particular, the 0.618 level is also known as the golden ratio and is frequently encountered in nature, art, and financial markets. This ratio indicates that the market has found a certain balance point within itself. Therefore, an upward reaction of the price from this level is an indication of an extremely healthy and strong structure. In addition, investors who buy in these areas are usually more conscious and strategic market players. They know the importance of these levels and tend to buy when the price reaches these points. Therefore, the 0.618 and 0.786 zones also work as high demand zones. The buying pressure from these areas makes it easier for the price to accelerate upwards again. The fact that candle patterns are also supportive in these areas, such as pin closes or strong green candles, makes this turnaround signal even more reliable. At this point, it is also worth paying attention to the volume data. If the price is making an upward move at these Fibonacci reversal levels and volume is also increasing, this indicates that the move is not only technical, but also supported by strong buying demand. Bullish reversals are usually a harbinger of a sustained and steady uptrend. This gives traders confidence and brings more people into the market. Therefore, when both the technical significance of the Fibonacci levels and the volumetric support are combined, it can be safely said that the upward movement of the price from this area has serious potential. This technical structure generates positive signals not only in terms of price, but also in terms of investor psychology, because the 0.618, 0.786 levels are the areas where market participants think that it will not fall any further and confidence is restored. Purchases in these regions make it easier to target new highs if the price breaks upwards. Especially if the previous highs are retested and then broken, it becomes inevitable for the price to enter a brand new bullish channel. RSI, one of the most important indicators in technical analysis, is a powerful tool that traders often use to predict the balance of trading in the market and possible trend reversals. When we take a look at the current chart analysis, we can see that the RSI indicator is showing an increasingly prominent rising trend line. This trend is particularly valuable for short and medium-term market participants, as this pattern in the RSI usually indicates that a similar bullish pattern is forming on the price chart. As we know, the RSI is an oscillator that oscillates between 0 and 100 and is usually interpreted as overbought above 70 and oversold below 30. However, what is noteworthy here is that RSI can create its own trend structures beyond these classic levels. In the current view, a clearly upward sloping trend line has formed on the RSI chart. This line works like a dynamic support line that the RSI has touched several times before and reacted by bouncing up. The formation of such structures is an important technical signal that the market is starting to gain strength and that declines may be limited. This rising RSI trend, when considered together with the price chart, paints a very positive picture, because rising lows in the RSI usually coincide with the formation of rising lows on the price chart, indicating that a bullish structure is strengthening in the market. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.